How should investors be setting up for the second half? Let's ask Omar Aguilar. He's CEO and CIO of Schwab Asset Management back here at Post Nice. Nice to see you again. So do we assume that what worked in the first half is just going to work in the second half? Is that how you're approaching it?
No, it actually never works that way. Usually, especially when you see these strong, and I would probably say confusing tail of markets, usually you should expect something else coming in the second half. You know, the bond markets have been leading us towards, a more recessionary, more negative. That's typical bond trading talking. And then, equity markets seems to be a little more optimistic, thinking that we're going to skip the recession and we may just pass through everything bad, that's about to happen.
Oh, good. That's why we have you here. You have to tell us who's right. Who's right?
Well, I think what it is, there is a theory about these rolling recessions that makes mean that both are right. It's just that we're not going to have one big recession. And in fact, the recession that we started seeing from the end of last year seems to be coming through. And we're now in the process of having this expansion, component. I think what is interesting is, like, if you look at the GDP, when you look at housing, when you look at consumer, everything points that the economy is so resilient.
Wow. So you pretty much ascribe to what Ed Yardeni has told us in the last, handful of days. What was a rolling recession has now become a rolling expansion. You believe in that? That is,
our likely scenario. There's still a small probability that there will be these leading indicators that will end up to be right. If you think about it, out of the last 7 tightening cycles of the Fed since the 1950s, it always ends up in a recession. So there has to be something different, which in our mind, it has to be the COVID.
So are you insinuating then, if you see a rolling expansion, then that is the reason that you'd have a catch-up trade from some of those more cyclical sectors that underperformed in the first half?
And that's exactly the reason why we continue to think about this barbell scenario, because cyclicals and small cap basically are the ones that are starting to just look very attractive for the second part of the year.
What about technology? Because what everybody wants to know is the runaway winner in the first half. Not a lot of people saw it coming. AI seems to have changed the game in terms of investor psyche towards that space. Does that continue?
Well, the market usually, we tend to think about there's 4 big drivers: the economy, earnings, sentiment, and valuation. 2 of those signals, valuation and sentiment, seem to be contradicting the tech trade.
You think they've gotten too expensive?
It's gotten too expensive. Multiples are way too expensive, and it's all driven by sentiment.
And you don't think that can be sustained because you don't think earnings are going to live up to it?
We need a little bit more breadth. If you think about it, what we have so far in that AI trade and that technology search is being driven by 10 stocks. What we actually need to see is, there are companies that are generating good cash flow. Yeah, and there's good free cash flow. These companies are successful. So it's not the same, as what people think about the late, .com, late 90s setup. There's very different in this case. They're more sustainable. However, we need to see a little more breadth that actually continues to see the earnings growth so that we can actually believe that trade will be sustainable.
My point, though, lastly and briefly, is that it has widened out a little bit. It's not just the so-called Magnificent Seven and everything else. You have had a pickup lately in market breadth.
Yeah. Not a lot. It's just, I think we just need to start somewhere. And I think to us, that's actually the point. I think we'd rather see the diversification go through other parts of the market rather than just stay in tech.
All right. It's good to see you again. We'll see you soon. Omar, thank you. Omar Aguilar.